The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and blah, blah, blah,
We're
blah,
not shut down.
Blah, blah. You know, I just can't stand politicians. I've just been politicianed out.
Amen.
I just can't stand there. Anyway, I'm Esther Gulius, the Tax Lady from EG Tax. 8030930, 8030930, star 930 on the cell phone. That's Chris Fabian. He's with me, and we are not on strike. And we're still operating, funded or not funded. Speaking of that, there are some functions. I can't believe this is going to go on long because it will end up to be a political football here shortly. But there are functions of the Internal Revenue Service that aren't processing. They're not processing amended returns. Audits are held up. Yay! No audits.
Push them back further. Yep.
Yeah. What else did we read?
Call centers are down.
Right, but our call centers are up.
Yep.
So you have questions. You can call. We have 33 area offices, and you can call our corporate headquarters at 632-7886. And you can contact any of our branch offices. We have real people answering the phones. We are open today till 5. On Monday, we start our long hauls, 9 to 9, Monday through Friday, 9 to 5 on Saturday. And
3 mall offices.
Yeah.
On Sundays.
And that's Sunday. The 3 mall offices are
the Factory Outlet Mall in Niagara Falls, the McKinley Mall in Blaisdell, and new this year is the Boulevard Mall in Amherst.
Right. So if you want to get in out of the cold, I know there's football at 3:00 tomorrow. My stepson told me that there's football tomorrow at 3:00, but if you want to get out of the cold, you can come into one of the mall offices on Sunday as well. Anyway, we're talking taxes. 8030930, 8030930, star 930 on a cell phone. All right, we're talking about what you need to do to file your tax return. One of the things that's real important is if you have to have all of your forms together in order to file, unless you want a letter in the summertime and you want to mess up your refund and hold up your refund. It doesn't make any sense. You really need to have those forms because if you got the form, they got the form. But one of the forms that you don't get unless you go online is the New York State unemployment.
Right. So you have to go online and download it. Or if you can get a hold of somebody, you can call and request a paper copy to be mailed to you, but that will take an extra week. So
right. But you can go online to get your New York State unemployment. If you say, well, they haven't sent it to me, too bad for them. It's really too bad for you because it'll mess up your refund. By the way, all of our offices are open, like we said, Monday 9 to 9. Refunds. Let's talk about refunds. And when is opening day for the IRS, assuming that they're back in business?
As of right now, it's still the 29th of January. That's when they turn their computers on.
Right. But we are doing tax returns. Like today, I did 5 or 6 tax returns. What we do is we just get them all lined up electronically, and as soon as the IRS is open, jump, they go. Right. So if you got your stuff, we can get it taken care of.
That's them turning on.
And then we also are offering the easy advance.
Right. And why is that so important this year is because the IRS also came out saying the returns with earned income credit and additional child tax credit, those people aren't going to get their refunds to beginning of March to middle of March.
Right. And so you can get an interest-free, no APR loan as an advance on your tax refund. It's not your tax refund. It's an advance on your tax refund. And EG Tax offers that as well. So if you're somebody that's saying, oh, man, they're going to wait till the end of February, beginning of March to get my refund, this will get you some of your extra money. Obviously, the best thing you should do is change your W-4 at work so you don't get these big refunds. But if you're in that position, EG Tax wants to help.
Right. And they just, we talked before the radio show, they adjusted the circular ease so people are going to get more money in their paychecks. But you said three out of
the 5 clients I did today are all going to owe more money next year.
Right.
Their refunds are smaller. The first one was an over-the-road trucker, and he has about $10,000 worth of itemized deductions for being over the road. He gets 80% of his
per
overnight.
diems.
Yeah, per diems. And next year, because it's a miscellaneous itemized deduction, he won't get that deduction. So it's going to cost him, I figured, about $1,000 in taxes. My next one was a couple whose one child turns 17 this year. So they're going to lose $2,000 in child tax credit next year. And so that's a big problem for them. And what was the third couple? The third couple, I can't remember.
But they're going to lose money, but they're getting more money in their paycheck, which means next year, if they don't do the adjustments,
they'll owe a lot.
They'll owe even more money.
So but that's part of what we do when we're doing the tax return. When we do the return, then when we're all done, we say, and now next year, this is how it's going to look. So it gives you something to plan. The other thing, and I know we have our phone calls, 8030930, 8030930, star 930 on a cell phone. You need your Social Security. Those statements have been mailed out. Your retirement income is 1099-R. All your W-2 forms, stocks. If your stock was traded last year, and even though you don't think it was sold, that is a sale, and you have to wait for those stock brokerage forms, which usually come the end of February, beginning of March.
Right.
Well,
unless they get an extension and delay it even further.
Right. And sometimes, let's face it, some of your brokerage firms send out a copy, then they send out a corrected copy, then they send out a corrected copy, and they tell you don't file your tax return too early. So it's extremely important that you know what forms you have and coming, and that's what you wait for. Otherwise, you'll just mess up your tax return. Okay, let's go to the phones, and we got Pat in Tonawanda. Hi, Pat.
Hi, Esther. This is completely off your subject.
Yeah.
But it's still a problem.
Yeah.
I belong to an organization, and our sole purpose is to raise scholarship money for needy students.
Okay.
Run into something that we're trying to raise money. We've sold the entertainment books, never been asked for an identification number. And now we're dealing with a company, and I don't know if I would name it or not, but they're community-oriented, and if we gather a lot of stuff, they will give us money for it. Well, it's Savers, actually.
Okay.
And now they're needing a number, and we don't have a number.
Well, it's an employer ID number, and the 501c3. Okay, so the community-based organization that you're working with, I am assuming, is a qualified not-for-profit charity. They would have an employer ID number. If they don't have one, Pat, you can have them call us, and we'll get them one.
Okay. Now, may I ask you this? We belong to a larger organization that has a New York State tax-exempt number.
Okay, no, it's different. The tax-exempt number for New York State is a number that New York State assigns to the corporation, the not-for-profit. And that may be the employer ID number. But what you would want to do is call your parent company and say to them, we're raising money for selling entertainment books. We have a big donor, and they need an EIN number. Do we use yours? And if they say no, your local chapter should have one. Go to the president of your local chapter. If nobody's gotten one, give us a call. We'll help you to get it.
Okay. Is there a the tax-exempt number that I have, that is different than what I need? It's
an employer ID number, so I don't know what you're looking at as far as the tax-exempt number.
Is the organization a 501c3, the local one that you do this work for?
I don't know that.
Yeah, that's why. I mean, we don't want to guess, Pat.
Yeah.
So if you want, we can do a 3-way. You can call the office on Monday, and no, not good.
IRS is shut down.
Oh.
What?
Okay, but we could call her the president
the
and
parent.
find out
Yep.
if they have ask your president if they have an employer ID number.
I am the president. I
Son of a gun.
yeah.
Do you file a tax return for this organization?
Don't. No. We've never been involved in any kind.
Okay, call your New York chapter and ask them if they are filing a tax. Do you guys send up statements to them?
Not that I know of. Not that I'm aware of.
You guys aren't reporting the income at all?
We don't have an income.
But you do. When you're selling those books, that's income.
Okay, and even though we're giving it back to
Right, right. So really, I think what you need to do, Pat, is kind of get your horse before the cart. And so maybe you want to come in, and we'll get your we'll talk to the the state representative to see if they have sanctioned you, and they really need to tighten up the reins, because that would not be so good if you're. But you opened up a bank account, right?
Yes, I have a bank.
Then the bank must have the employer ID number.
Okay, then I'll go there first.
Good. But call us if you need help, okay?
Very much. All
Thank you, dear. Bye-bye.
Interesting.
Yeah, she could really end up
In
with
trouble.
a problem. Yeah.
Yep.
We wouldn't want that. Let's go to Carl. Hey, Carl, how can we help you, sir?
My big question is I'm looking into alternative energy sources, and I've had 4 people come out and give me an estimate on solar panels.
Yep.
I have 2 of them that have said, oh, yes, you can claim a deduction on your taxes for next year, and I've had 2 that kind of skated over that issue. You're the breaker. You're the...
Well, solar is still there. Okay, the solar credits are still there, both for the federal and the state.
But not energy conservation.
Not
windows and doors and caulking anymore.
Okay.
So the solar panels will still qualify.
All right.
Do you have taxable income on your tax return?
Yes.
Okay.
Okay.
Because it's a non-refundable credit.
Right. So you want to make sure that if you've taken all that you can take as far as the federal credit or the state credit, that if you have other sources of income, like maybe an IRA, that you take this as an opportunity to withdraw from your IRA, so this credit will cover your taxes. So talk to somebody before you finalize that. Okay, Carl?
All right. Thank you.
All right. Thank you, sir. Good to be a tiebreaker, isn't it? I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. And we're going to go to Paul. Hey, Paul, how can we help you, sir?
Hello. Esther, I'm wondering about the Part B premiums that are taken out of our Social Security checks.
Yep.
If that is usable towards the medical deduction.
Yep, Part B, Part A, Part D, that all counts towards medical.
And the Part D being the what they call the Advantage Plan premium?
Yes.
Mm-hmm.
Very good.
Okay. Thanks, Paul. Okay, I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break, and we'll be back on the other side with your questions. And that's what I like about you, too. I'm Esther Golias, the tax lady. We love you at EG Tax, and we want to help you. We have 33 area offices open, 9 to 9 Monday through Friday, 9 to 5 on Saturday, and we have 3 mall offices open on Sunday. And we have a website, egtax.com. You can type in a question. I get up in the middle of the night to answer your questions. You can get up in the middle and say, honey, I wonder if that's tax deductible. You type me, I answer. I answer. 8030930, 8030930, star 930 on your cell phone. Things important that you need to remember. All your income is taxable, okay, unless specifically exempt, right? You have to report your medical insurance premiums. You got to answer that this year on your 2017 return. If you ignore it, the IRS will not process your return.
Right. So those who file electronically, that's not going to be a big deal because you have to answer it for electronic programs.
Or they'll reject it.
Right. The ones who file paper, you have to make sure you mark that box.
Right. But if you do file electronically and you blow off that question, they're going to reject the return.
Right.
And if it's a rejected return, it means it hasn't been sent. There are a lot of exceptions to penalty. Right, Chris?
Oh, there's...
so let's say you didn't have health insurance. there are a lot of exceptions to penalties. So just because you didn't have health insurance doesn't mean you have to pay the penalty.
Right. I had someone today, it was unaffordable by $20 a month, but that saved him $1,400 in penalties.
Right.
Yep.
So unaffordability, you're caring for a loved one.
Yep.
You had a turn-off notice from your
utility company.
It's more than it's
A
about
death in your family.
Death in your family. It's more than 10% of your
income.
I mean, there's a lot of one of them is that it's unaffordable, and that's where you do it has to be X amount of your lowest silver plan, right?
Yep, second lowest cost silver plan. And so 8.16% of your income, if the second lowest cost silver plan is more than 8.1%, then it's no penalty.
Right. So don't just charge yourself a penalty. Make sure you claim all your dependents. Your children, if your children are in college, many times people think that the kid should claim themselves. That's not necessarily true. If your kid's up to the age of 24, full-time student, unless they're self-supporting, you can still claim them. You can have friends of your kids that lived in your house all year and had low income. You can still claim them as a dependent. Aunts, uncles, grandmas, grandpas, you'd be surprised about dependents. But speaking of dependents, if you're a non-custodial parent and the children live with the other parent, then and it's a recent divorce, you have to have a Form 8332 that releases the exemption by the custodial parent to you. That has to be filled out.
Right. And that's from 2011 on. I had another client yesterday. My husband's going to take me to Supreme Court because he says he gets to claim the children. I said, when was your divorce? She said, 3 years ago. I said, did you release them? Did you sign an 8332? She goes, no. I said, let him. He'll waste his money. You'll win with the IRS.
You should go with her, though, really. You really should. Hey, let's go back to the phones. We're going to talk to Dave in Lockport. He's waited so long. Hi, Dave. Thanks for your patience.
Hello. I have two questions, please.
Yeah.
The first one, my girlfriend's mom just turned 70 and a half this January.
Uh-huh.
Now, I found the instructions in the IRS that says she has to take the first RMD during this year or by April the 1st of
next year.
Mm-hmm. Now, but they just kept mentioning IRA everywhere through the instructions, but she has a 401k. Is that the same?
Is she still working there?
No.
Okay, then it's exactly the same.
It's exactly
right.
The same. Okay.
But then next year, if she waits, Dave, she's got to take that first RMD by April the 1st of 19. But then she has to take a second one next year before December 31st.
Yeah, and I told her not to do that because then they'll both be taxable next year.
But again, how much income does she have, and how much is the RMD supposed to be?
This is my girl's mom. I don't know how much she's got.
Sit down with her and say, I want to help you to tax plan. Well, if she needs any help, have her give us a call, okay?
I have already recommended you to her. And my second question, either if you don't want to do it now, maybe a little while later, I don't know, when you get ready, Schedule A, I know you know like the back of your hand. For like my planning sanity, would you consider just going right down through it and say what's gone and what's still there?
Absolutely. I think we're doing that next week.
Okay, next week.
All right, so listen up, Dave, okay?
All right, thank you.
Thanks, Dave. I'm Esther Golias, the tax lady from EG Tax, 8030930. Star 930 on a cell phone. We're going to take a break for news. Now that's good tax music. I like that, Frank. That's good tax music. Hey, I'm Esther Golias, the tax lady, 8030930, 8030930. I love that kind of.
That's my deduction.
Oh, that's my deduction, yeah. All right, 8030930, 8030930, star 930 on a cell phone, and we got Eric in Pendleton. Hey, sir, how can we help you, sir?
Hello, Esther.
Hey.
I have a question. I'm a business owner.
Yep.
And, there are several other businesses like mine in the area, and we are interested in forming a collaboration where we maybe sell tickets to come to our places, and we're wondering how we handle the money for that tax-wise.
Well, I mean, if you're putting together a partnership, okay, then you would do a partnership agreement and a partnership tax return, and I would suggest you do an LLP, and that's what you would do. Then the income would come into your partnership. Your expenses would then be reduced by the income from the sales, and the net profit would then be split by the percentage of ownership by each owner.
Okay, so we would even if we sent the money back to our businesses and the net return was zero to the organization, we still have to file a tax return with all.
Well, the organization is getting the money, so you have to set up a legal
collection of income
right
vehicle, which would be the partnership.
So you would have company ABC, company EFG, HIJ, XYZ before shareholders of this new partnership.
Yeah, so, I mean, the partnership might be Eric's Bike Shop, Paul's restaurant. You know what I'm saying? That might be the owners, which would then those K1s would flow to those businesses. I mean, it could be done like that as opposed to individual owners. In other words, the partnership could be owned by your businesses, which would then float, and then the partnership wouldn't make any money after your expenses.
Okay, we were trying to model something after like the Niagara Wine Trail and some of these other organizations, but we're not quite sure.
Well, if each one of you are selling tickets and the ticket sales are going collectively into one bucket, and then you guys agree to split it equally, then that would be the easy. Otherwise, it should be allocated to each individual business then. Maybe the ticket sales should be through each individual business, and that's how you would handle the sales. Maybe, why don't you, we have time this next week, just before everything gets really busy. Why don't you just call us and with your partners, and maybe we could just talk over the phone.
That sounds great. Thanks.
All right. Thanks, Eric. Our phone number, by the way, at the office is 632-7886. And, we can ask kind of personal questions, All right. Let's go back to the phones and we'll talk to Paul. Hey, Paul.
Hey, how you doing today?
Good. What can we do for you, sir?
I have a question. I have some income property.
Okay.
And I am about to retire and move.
Okay.
For quite a while. And the neighborhood that it's in is really, really depreciated.
Okay.
And to get it to where it would be a feasible sale, I mean, I've had it for 25 years, so it's paid for. Can I give it away?
You can do whatever you want. It's your property. The question is, if you give it away, though, then you get no money. So does it have any value at all?
Yes.
So tell me, if you were to just sell it right now as it is, realistically, what is it worth?
Oh, I've had it for sale and offered it out for $10,000, and nobody wants to touch it.
So is $5,000 more like what it's worth?
Yeah, probably, yeah.
All right, so you'd be giving up $5,000. So if you gift it away, and if you gift it to a charity, you would end up, if you're an itemizer, you'd end up with a charitable deduction based upon the fair market value of the property. So I would suggest you get an appraisal. If it's over $5,000, you got to get appraisal anyway. Oh. So you would get an itemized deduction for the fair market value of the asset. But, and if you sell it, it's going to be a taxable event, so the $5,000 would be taxable, but it'd be taxed at whatever bracket you're at, so it might be at 0%. But if you gift it away, you're going to end up giving away the money too.
Right, but if I give it to I was considering to give it to the tenant.
Okay, well, you can give it to the tenant if you want.
Yeah, so,
I mean, truly, if it's a gift, then there's no sale and there's nothing to report, and
you would record the transaction on your tax return and sell it for whatever basis you have on your depreciation left.
And the tenant is not your family member, right?
No.
Yeah.
Well, I sold it for $1.
Then you'd end up with, if there's any basis left on the building, let's say there's still $1,000 that hasn't been written off, then you'd end up with a $999 loss.
Okay.
Okay?
Yep.
All right, thanks, Paul.
No tax advantage for me to give it to a person.
Nope, none at all. The only benefit you're going to get on your taxes would be if you gave it to a charity, a not-for-profit.
Okay, cool.
Okay? Thank you. And it has to be a 501c3,
Correct.
not-for-profit.
Yep.
Okay, I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on your cell phone. And let's go to John in Buffalo. Hi, Mr. John. How can we help you, sir?
Yeah, if you're on disability and your parent dies, and they're leaving an estate of $100,000, do you get to keep that whole $100,000, or you got to share that somehow with the government?
Okay, so here's the only source of income that John has is either Social Security, disability, or something of that nature, VA or something. Correct?
Yes.
So you only have Social Security.
Yes.
Now the $100,000 that you inherited, did you inherit property? Did you inherit cash? Did you inherit stocks or bonds?
No, it's property.
Real estate?
Yeah, the house. Yeah.
Okay, so did you inherit it, John, or did Mom and Dad give it to you before they died?
My mom put it in her will, and I got yet to sell it, but it's not in New York State; it's in Arizona.
Okay, so he's going to get a stepped-up basis because he inherited it. So that means that you're going to have to file a tax return, but you will not pay taxes on it because it's a stepped-up basis.
And you won't have to pay back disability any of the money.
That's correct.
Okay, being that it's in Arizona, is there anything there?
You would have to do an
Arizona return, but there won't be anything taxable there either.
Okay, now she's got like about $2,000 or $4,000 somewhere in that ballpark in accounts.
That's tax-free.
Okay, yeah. All right.
Okay?
But what if I didn't file?
Well, then they're going to send you a letter, and they're going to say, "Oh, John, you sold property. You owe us money." Because they don't know that it was in the will and that there's a stepped-up basis. So if you don't want to go through the aggravation of answering a letter where they think you owe them $20,000, I would suggest that you get yourself an accountant who does the tax return, who uses a stepped-up basis so there's no capital gain, and you'll be good to go.
Okay, and then because of this new law, she has all these deductions, like she bought a new air conditioner for the house, a new fridge and all that stuff. Is that still deductible?
No, that's not. Never was deductible.
Our home improvements.
No, home improvements, there used to be a credit for putting energy-efficient items in your home, such as insulated doors, insulated windows, caulking, things of that nature. But that credit is now gone. Okay?
All right, thank you.
Thank you, sir. Sounds like maybe he's thinking about doing a tax return for Mom, too, right?
Yep.
Okay, let's go to Florida. Hey, Pat, how are you?
Fine, Esther. How are you?
What part of Florida?
Just above Tampa.
It was chilly there this week, wasn't it?
Yes, it was. Everything's froze up.
You poor baby. What is it, 70 right now?
No, it's in the 60s today. But
some people just got it so rough. Hey, Pat, how can we help you?
Okay, I'm a retired law enforcement. I get PSO deduction up to $3,000 for my medical.
Mm-hmm.
I also pay a premium to Blue Cross Blue Shield through my retirement, which doesn't come up to $3,000. But I also am Medicare, which I have $134 a month taken or pay to. Can I add that to it also to come up to $3,000?
No, it would be what all comes out of your pension check.
Well, it does eventually when it comes to my check.
No. It's what comes directly out of your pension check, what they withheld. So if yours is $200 a month they take for your health insurance.
But let me ask you something, Pat. How much is your income approximately?
Mine alone is $90,000.
Okay, so, and are you a married gentleman?
Yes.
And your spouse, what is their income?
Well, the total is about $129,000.
All right, does that include your Social Security?
I don't get Social Security.
All right, so $129,000. So the floor is going to be $12,900 in medical before you get $1.
Right, but he gets to take $3,000 off his page one of the 1040.
Yeah, but
right.
On his Schedule A, the floor is still going to be $12,900.
Right.
So if you're looking at itemizing your deductions until your medical, this is over and above the 3, until your medical on the Schedule A comes to $12,900, you're not going to get a deduction anyway.
Right, I don't. I go standard deduction on that.
Okay.
But my second question is mailing in to have you do my taxes.
Okay.
Do I mail in the original documents or copies of everything?
We have a wonderful app, and we didn't get a chance to tell everybody. You can go to the App Store and look for EG Tax Service app. You can download the app, and on there, it has so many cool things. You can actually scan using your cell phone and load it up into and you send it. It'll come, I don't know, through the miracle of whatever the clouds do, but it actually comes to us, and we'd have all the copies of all your documents when they come through the EG Tax app.
Okay.
So it's free, so you
can use the app, or if you're going to mail it, mail copies.
Yeah. Don't mail copies, but try the app. You might, if you're electronic at all, you might have fun with it.
If you need help with it, you can call Tim at our corporate office, and he'll help you through it.
Okay?
All right.
All right, so you just go sit in the backyard and freeze your Cadoti off. Okay?
No, when your show's over with. Okay.
Oh, thanks, Pat. Have a great day.
You too. Thank you very much.
Bye-bye. Okay, let's see. We're going to go to, well, you know what? We got to take a break right now. And we're going to be back on the other side with Dave, Gene, Mark, and your calls. 8030930, 8030930, star 930 on the cell phone. Funky Town. I love Funky Town. That's my kind of music.
You are from Detroit.
I am from Detroit. Originally, I am. A lot of people say, my sister went to school. I went to Detroit. I went to Lincoln Park High School. I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930. All right, we're going to run through this list of things for you because this is the beginning of tax season. We want to make sure you know what you're doing here. Don't claim your kids' income on your tax return. If your kids made income, it goes on their tax returns. Sometimes you should consider filing separately. Married separately could save you money. You got to do it both ways. Make sure that all capital gains are listed on your Schedule D for computation purposes, along with your qualified dividends, because you pay at a lower rate.
Yep.
Right? Because it's not ordinary income. The New York return, it's a difficult return. It's like the federal return. So there are adjustments to New York State that are only found in New York State. Like, for instance, the bed tax. My mom right now is in a nursing home, and they're assessing her a 6% bed tax, and you get that back. But a lot of people don't know that. And you figure 6% on $100,000 is a lot of money, $6,000.
Yep.
So, filing deadlines, it's now April the 17th to file your federal return this year. Corporations and partnerships are due March 15th, right?
Yes.
Reading your W-2, it's Box 1 that's taxable, right?
Yep, Box 1. Box 3 and 5 is your taxable Social Security, but that really only impacts you when you make over the $124,000.
And if you contributed to your daycare through a cafeteria plan, that they took that out under Box 1. You have to do a 2441, or they'll end up taxing you on it again. So you got to make sure that you do the daycare credit, even though you say it went through the cafeteria plan,
Yep.
or you'll end up paying taxes on it. If you worked in another state, you have to do 2 state returns, the New York State and the other state return, but you get a credit if you're a resident of New York State by doing a 112R for the taxes paid to the other state. Filing status. If you can move from being single to head of the household, you'll save a lot of money. And so you'd have to have a qualified individual in order to do that. And let's see what else. Tax brackets are determined by your filing status.
If you get married
and the earned income credit is really, really, really a big deal.
Right.
Yeah.
And if you get married during the year, you have to file joint, even though you may have gotten married
joint
December.
Or married separate.
Right. You can't be single or head of household anymore.
Okay, let's go quickly to the phones. We're going to talk to Dave in Buffalo. Hi, Dave.
Hi, Esther. Last year I sold a personal residency.
Yeah.
And I made no profit on it. Matter of fact, I put in more money into the house than I got out. So do I have to put that on my income tax this year?
Well, it's not going to be taxable. There's a worksheet. That's all. But you don't. You. It is a non-taxable event.
So it's non-taxable. Do I have to put it on there at all?
No.
No.
So I could just fill out the taxes because I really don't save money by having some withheld, and I just.
Yeah, it's not taxable and it doesn't have to go on your return. But just be prepared, because if they send you a 1099-S form and they ever question it, you want to make sure that you're ready to show that you lived there 2 out of the last 5 years, or that you lost money on the house.
Okay.
Okay?
Thank you so much.
All right, thank you. And then we got Dave. Hey, Dave.
Nope, Jean.
Jean. Hey, Jean, how can we help you?
Hi, I'm calling about my daughter. She isn't here at the moment. She's going to turn 65 in April. She was married for 13 years. She's divorced. Can she keep on working and collect her Social Security on her husband?
Well, she can. She's at almost normal retirement age, so she's entitled to full Social Security. What she wants to do is check with Social Security to see if she would do better staying with her ex-husband's Social Security or using hers, depending upon her income. So what she should do is check with Social Security, and they'll let her know.
Which she wants to keep on working because she's been on.
That's good. She can keep working. At this point in time, she is not going to be limited. If you're under normal retirement age, you're limited to income of $16,920 before you'd have to start paying it back. But at normal retirement age, which would be 66, and in the year you turn 66, you can make $44,880. She doesn't have to pay back that, so she can keep working.
Yeah, well, she's worked the same job for 45 years, but it's a low income job.
Well, all right, so she's not going to be limited, but she wants to check with Social Security to see if she does better on her own or to go through her ex-husband. But it sounds to me like she'll be better off going through her ex-husband.
Yeah, well, we just thought there was something that if you turn 65, if you were born before 1953, you could collect on your husband's and still work.
That's why I said she needs to call Social Security and see which is better for her, because at this point in time, she's not going to be having to pay any of it back. So the important thing for her to do is to call Social Security and ask them. They're privy to his records.
Oh, yes.
Okay?
And then we just been wondering about this.
Yeah, well, have her call Social Security.
Yeah, okay.
All right.
She really needs to keep on working.
Absolutely. Well, just have her call Social Security and ask the question. They'll look at the two numbers and they'll let her know.
All right, then.
All right, thank you. And she would only get half of his.
Right.
So that's why only they know. And let's see, we're going to go to Mark and East Aurora. Hey, Mark, how can we help you, sir?
I had about a $50,000 real estate loss, but I wasn't on the title. I was a cash investor.
Mm-hmm.
And I was wondering about the carryback rules, if they apply in that situation.
Okay. How were you legally? How do you legally prove you were an investor? What was it? Was it a personal residence? Was it?
It was a personal residence
for a child.
Excuse me.
Was it your child?
No.
Relative.
Third party.
Third party, not related.
No.
You were in the business of loaning money?
It was a contractual arrangement where we were going to split the property off, and then,
But if you weren't on the title, did you have a legal document?
Yes, I got the document was on the sell. I got paid back.
Right, but did you have a legal document saying this person owed you X amount of dollars?
No, it was all verbal.
There's nothing you can do.
There's what you mean? I had to have a contract?
Yep. It has to be a bona fide debt that you can prove that you really legally were supposed to be paid back. And this is for anybody listening. Don't do anything on a handshake. You never know when something bad's going to happen, like this, what's happened to our friend here. it's important that you do everything in writing, have all the documentation, because in the event the debt goes bad, you have no proof that they owed it to you, and as a result, it won't hold any water. Have you taken them to court? Have you sued them, Mark?
I didn't sue them. We came to a verbal agreement that what happened was we ended up, working on the house and fixing it up, and then not getting the investment back. But all the cash was mine, but the mortgage and the title were in their name because they had trouble at the time. I was cash rich and credit poor.
Okay, but the thing is, you have nothing you have no documentation that said that you were loaning them this money, that you were an investor in this enterprise, correct?
At the time, no, but at the time of the sale, we had a legal contract with an attorney on agreeing upon the sale price.
Okay, well, all right. So what I'd suggest you do is that you would go to your attorney to see if there is any way that he would feel that you would have a legal claim to the whole situation, because you have to be able to prove to the IRS why you loaned the money. It has to be a bona fide debt.
Okay, and then what the last question, though, is my original one. If I can prove that, can I carry it back 2 years, correct?
Well, if it's a bad debt, then it would be a Schedule D, and that's not carried back.
Right. You carry
and
that
actually,
forward.
they got rid of the NOL carry back.
Right.
It's now you can only go forward with
and
NOLs.
You can only take 80%. What I suggest you do, Mark, is why don't you call us Monday so we can talk privately, okay?
Okay.
Thank you, sir.
Good.
Bye-bye. We're at 632-7886. Let's go to Jay, who's waited so long. Jay, how can we help you?
Well, what I'm the question is a simple yes or no. I received a $2,100 check this year from a class action suit. Is that taxable?
Yes. You said yes or no.
Yeah, okay.
Okay.
So I just want to keep track of
Yeah, they're going to send you a form before January 31st.
Well, no, I received that this year.
Oh, in 18. Then it's going to be taxable in 18.
Yeah.
Okay.
They'll send me a 1099.
And thanks for waiting, Jay.
Okay, no problem.
Bye-bye. And we're going to go to, let's see, we got Lori. Hey, Lori, how can we help you?
Hi, Esther. First of all, thank you so much for everything you do.
Thanks.
Services before. My son was out of state. He's used you. I have a question. I am on disability. I'm no longer able to stay where I'm living, so I am going to be moving out of state with him. He is almost 25 years old. However, I'm leaving behind two 15-year-olds that will be with their dad.
Okay.
I am currently hoping for a hearing soon on child support because I am down to less than $400 for that. My question to you is, and my son asked, and I'm like, I don't think so. You're their brother. My ex, cannot come after my son being a half brother to the twins.
Okay, you're the mom, right? And so your ex-husband's looking for child support from you. He would not look from child support for your son. All right, their brother is not going to have to pay child support.
That's what he was worried about.
Right, but I'm not an attorney. You can always double check with an attorney, but I'm like 99.9999%.
And we're running out of time.
Okay, and I'm running out of time, Lori. Sorry to lose you. Buffalo will miss you. I'm Esther Gullius, the tax lady. Mike from Cheektowaga. Hang on, we'll talk to you after the show. If you need us during the week, egtax.com. All our offices are open 9 to 9. We love you. Our fees are reasonable. We do the easy advance. Until next week, I'm Esther Gullius with Chris Fabian. Have a great week.